So what we've got is a high probability that our money's going to be worth less. Asset prices are going to rise, but our wages won't, which is the big problem. We've got this massive wave of debts to be refinanced. So that's normally a very positive backdrop for crypto. Bitcoin finishes this cycle closer to 250,000. I think a lot of people are lower. I think it might be higher because of the dynamics of the ETF and other stuff. I'm pegging Ethereum between 15 and 20,000. And I'm pegging Solana between 750 and 1,000.
After weeks of post-ETF sell-off that saw Bitcoin briefly drop below $39,000 last month, the leading crypto asset now seems ready for takeoff. After spending several disappointing days just above 42,000, Bitcoin rose by $1,000 on Monday, but lost it shortly afterward. We coasted along the $42,000 range again until Wednesday, when the leading cryptocurrency began another promising ascent, climbing rapidly to almost $48,000 per coin. According to data from CoinMarketCap, the leading crypto asset has gained over 10% in the past week and around 4.77% in the last 24 hours. But experts expect an even bigger rally within the next few weeks, leading to the 2024 halving event in April. According to Real Vision founder and CEO Raoul, this Bitcoin and crypto rally will get bigger and bigger for the remainder of the bull market. Pal, a former Goldman Sachs executive, is predicting a 431% increase in Bitcoin's price before the cycle ends. His predictions for Ethereum and Solana are even more bullish. He expects both to gain around 700% and 852%, respectively, before the cycle ends in 2025. During his latest interview with Wealthion, the renowned macro analyst discusses why he is so bullish on crypto assets like Bitcoin, Ethereum, and Solana, not just for this cycle, but also in the long term. Please watch the video to the end, as Pal breaks down why he is so bullish on crypto in 2024 and how central banks will force more people into crypto before the year ends. As you watch, don't forget to give this video a thumbs up, subscribe to the channel, and turn on post notifications for more videos like this. Thanks, and enjoy.
So I'm going to give two levels. The first, the very big picture level, is the world is awash with debt. Global debt is 400% of global GDP. These are bananas numbers. So what does that mean? We talk about debt a lot. What it means really is the collateral, the assets that back the system have lots and lots of people claiming on them. So if anything goes wrong, you get a fraction of your money back. Also, we're learning that banks are now bailing in creditors. So you find that the issue in the leverage world is you actually don't think, whatever you think you own, you don't actually own. It can be taken away from you. That's the real issue we're trying to solve here at a very top level, is how do I keep that recorded ownership of what is mine and what is yours and don't pollute them because some third party uses them for their own means. And then before you know it, nobody knows anything. But the other big change was obviously the internet. So when I got into this journey, the internet was around, but it wasn't the scale of what it is now. We're now creating these global nation states that are digital, that operate outside of the US or the UK or Europe. And they need a system of, as we get more digital, each day our lives get more digital. Digital assets now have value. This digital infrastructure is much more efficient at moving stuff around and recording the ownership. So if we now go to this system where in the United States you buy a house and it gets stamped and go to a notary and then it get recorded in a registrar, this can be instantaneous, everywhere and nowhere, and always verifiable. So it's really the operating system for the digital age. And without it, it kind of doesn't function. It's all a bit clunky. But with this, it's instantaneous settlement, recorded ownership, and transfer of everything. So it's kind of at three levels. Firstly, people understand that the system is broken and they're looking for answers. Some people choose gold. Some people choose Bitcoin. People use different ways of getting around this. They can feel it. It's all around you. You can see it with populism. You can see it with just how markets react. So there's this feeling that I need to find an answer here. a lot of that is being driven by, we know there's all this debt and I'm scared of it. Okay, that's good. The other thing is, what is the answer that the central banks chose, or the governments? It was create more money. So you've got this macro backdrop of debt and this fear. So that's driving adoption. And then people are finding new use cases like NFTs for smart contract stuff. That's creating a technology adoption like anything, like the internet was. And it happens to be the fastest adoption of any technology the world has ever seen, except AI, which has been faster. So those two things are driving the movement of crypto. So the crypto price is based off those two issues. The adoption of the technology, as everybody's starting to build on this new tech stack, and because it solves a lot of problems. And then it's the thing that the central banks are doing, are devaluing your currency all the time. That creates a super mega trend within this. Now, it as a space is growing on average, including the bear markets, which are brutal, as we all know, it's growing at 100% a year as a space. So there are 516 million wallets as of end of last year, active wallets. If it's growing at 100%, by the end of this year, it's 1 billion. Then the end of the year after, it's 2 billion. So the numbers are vast as people are adopting it. Now, the difference here between this and the internet or the mobile phone is we were users of the internet and mobile phone, but we didn't make money out of it unless you happen to own the right shares. But nobody could own the infrastructure of the internet. Different parts were. Here, you can actually own the thing by owning a token.
Pal is one of many analysts who have predicted significant increases in crypto users in 2024. Early last year, Crypto.com released its market sizing report for 2022, showing a 39% increase in global crypto owners despite the bear market. According to the report, global crypto owners rose from 306 million in January 2022 to 425 million in December. Bitcoin users alone increased by 20%. In the first half of 2023, Crypto.com again reported a 21% increase in crypto owners, from 2022's 425 million to 516 million in June 2023. This number is expected to grow even more significantly during the bull market in 2024. Last December, analysts from crypto exchange Bitfinex published a report predicting that the number of crypto owners could escalate to 950 million global users before the year ends. The analysts predicted this growth could easily be reached if current bullish market conditions continued through the year. They wrote, "Looking ahead to 2024 and contingent upon market conditions, we anticipate that the number of global cryptocurrency owners could escalate to between 850 and 950 million. This projection underscores the increasing global interest in and acceptance of cryptocurrencies." Let's get back to Pal's interview, as he speaks further about macro and crypto and his extremely bullish predictions for Bitcoin, Ethereum, and Solana.
This is the first global, homogeneous investment product the world has ever seen that can operate like this. So it's the same product. Bitcoin is Bitcoin in India as it is in Nigeria, as it is in London, as it is in Hawaii. It's the same thing. Indian investors can't trade Tesla shares. Yes, they can trade gold, but they don't have access to it because you have to go to the store and buy gold jewelry, and you've lost a lot of the markup within that. But here, anybody can get a wallet because it's on the internet, and you can send money home to your mother in the Philippines from the United States instantaneously. And by just owning one of the tokens, an Ethereum token or whatever it is, you've got a share of it. So if more people adopt it, you get richer. This is like one of the greatest schemes the world has ever seen in creating mass wealth, not for Wall Street, but for retail, who got to front run all of this, and create a new system that solves the problem of what's the investment, what the central banks and governments are doing, and solves the problem of an over-indebted society. I mean, that's how big it is.
What does your portfolio look like right now? What moves are you making, and what advice for this year ahead for the markets?
So my advice is, I spend a lot of time, I haven't talked a lot about it, but I spend a lot of time looking at the macroeconomy and what is going and where it's going to drive assets. And my view is that the issues we've been talking about, printing of money, excess debt, are going to be the feature of the next 2 years. How do you pay for that? And so therefore, I am very aggressively positioned in crypto because the only other secular trend there is, I can divide any asset like the S&P 500 or real estate or gold by the central bank balance sheet, the Fed balance sheet, i.e. how much money are the Fed printing or putting on their books. And most of them are pretty flatline. Then you look at the NASDAQ and it's going up because we're getting more digital every day, so there's endless demand. And then crypto goes up exponentially, as we know. So the fastest horse in the race is crypto. So I'm actually 100% of my liquid net worth in this. And I have been actually since 2020. And I use the bear markets to add into, because I think we are in a once in a lifetime wealth accumulation opportunity for everybody. Be you rich or poor, you can still put 10% of your savings in as you go. And that's how strongly I feel about it. It's not just a passing interest. It's not something I say on TV. It's something I actually truly believe in.
So Bitcoin, where is it in 18 months?
I don't like making these predictions because both people like you and I get beaten up over the head with it and said, why didn't it happen?
Yes,
You said
I've made a lot of wrong predictions, which is why I want you to be wrong as well.
I'm kind of thinking Bitcoin finishes this cycle closer to 250,000. I think a lot of people are lower. I think it might be higher because of the dynamics of the ETF and other stuff. I'm pegging Ethereum between 15 and 20,000. And I'm pegging Solana between 750 and 1,000.
Wow. Okay, that's a big move for
yeah,
Solana.
so I think it's the relative outperform. So my view is Bitcoin starts the cycle and outperforms in the start. Then people go out the risk curve. ETH. We're going to have an ETH ETF. We'll see the market pick up there.
Right.
But the horse that's moving faster is the one that's coming from a smaller adoption base. It moves faster.
Let us know your thoughts on Pal's predictions and overall outlook in the comments section below. Meanwhile, Finder, an independent comparison platform and information service provider, has given its updated price predictions for Bitcoin in 2024. According to results from a January 2024 survey of 40 crypto industry specialists, Finder expects Bitcoin's price to rise to $77,423 by the end of 2024, $122,688 by 2025, and $366,935 by 2030. In its report, the information service provider said, "Our analysts were more bullish than in our most recent survey from October 2023 and in our survey from this time last year. In neither our October 2023 nor January 2023 surveys did our panelists think Bitcoin's price would crack $100,000 by 2025 or $300,000 by 2030. The majority of our panelists believe it's a good time to buy Bitcoin. To be exact, 57.5% think Bitcoin is a buy at its current price, while 37.5% believe it's a good time to hold the asset. Only 5% think it's time to sell." Do you agree with these predictions? What are your predictions for Bitcoin, Ethereum, Solana, and other top cryptocurrencies in 2024 and beyond? Please drop your comments and observations in the comments section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching.